Welcome everybody to 15 Minutes of Finance, where in the next 15 minutes, I'm going to get you excited about investing. Let's jump into it. All right, guys, we have a flurry, is what the news decided to call it today, a flurry of earnings report releases this week. And if you got to learn one thing here, okay, you're learning it here at the forefront, okay? We're not making you stay to watch the whole video. If there's one thing you get out of today, and hopefully every time we talk about earnings reports, the number one thing that matters is growth. Earnings. Are they growing? Is revenue improving? Are they making a profit? If they're not making a profit, which isn't always mandatory, are they reinvesting it in CapEx and R&D? Where is the money going that they are getting from growth quarter after quarter, year over year? That is the most important thing, hands down, with a company when it comes to investing in them, right? This week, we have a bunch of earnings reports. We got Tesla. We got, I think, Delta Airlines does it. We have a bunch of banks giving earnings. This is a big week for us, especially with the government shutdown when there's not a lot of economic news. Earnings is going to run the show, except for I do think we have, let me ask that real quick, CPI data release. We were supposed to get CPI last week, but obviously it got pushed back. Yeah, it looks like Friday, October 24th, we'll get some CPI data, which will be huge for whether or not the Fed is going to cut rates or not. Okay, let's jump into the term of the day, okay, which is a proprietary term. This is from yours truly. Boring equals bucks, okay? Boring equals bucks. I want you to remember that. Write it down. Boring companies typically means money, okay? Bucks, another term for cash. It typically means money. The reason for that is there's just not enough, and we'll make a short about this later, but there's just nothing exciting that a headline, that Wall Street, that a news reporter, financial analyst could write that could ruin a boring company's consistent growth. What are they going to talk about? They're going to talk about how Home Depot sells more toilet seats than carbon fiber this last month. No one cares about any of that stuff, but every small business utilizes a Home Depot's or a Lowe's to get their material to make the business. And you shop at small businesses probably, if not every day, at least every week. And therefore you're benefiting from what Home Depot is doing. And there are tons and tons of companies just like that are boring, but make a lot of money, especially over the last 10 years, that you could be investing in. Remember, boring equals bucks. If it can be so boring that it avoids headlines, that's a great company to start looking at. I love starting there when I'm looking at investing companies. Okay, let's jump into the news today. Stocks advanced to begin a busy week that will see a flurry of corporate earnings reports, with investors also awaiting further development on the trade front and inflation data that will factor into the Federal Reserve's upcoming decision for interest rates. The tech-heavy NASDAQ, benchmark S&P 500, and blue chip Dow Jones Industrial Average were up 1.3%, 1%, and 0.9% in recent trading. Last week, the three indexes all closed up roughly 2%. Listen, you guys hear that positive news? We don't feel that. The headlines have been extremely negative the last, I would say, 8 days. And sure, there's been volatility, right? When Trump's tweeting about China, when he's tweeting about China, bad things happen. And then he walks it back and we're back to greener pastures. Remember, the headlines do not tell the story. They're trying to get a rise out of you. All right. Gold futures, which remain a safe haven amid market volatility and a U.S. government shutdown at 20 days and counting, jumped 3.5% to 4,360, and they set their latest record high at 4,392 early Friday before retreating. The 10-year Treasury yield, which influences borrowing costs of products like mortgages, pulled back slightly to 3.99 near 6-month lows. I like buying Treasuries right now. I think a 3.99%, I would love it if it was like 4.01. That I think is going to be valuable and worth having as these rates drop. They don't have to give you the high yield savings account, the CD rates that you're used to seeing the last 3 months, 3 years. Those are going away. They're gone, right? Treasury rates right now, I love them. I think they're worth keeping. Even if the market booms, having that as a higher yield. Remember, if yield goes up, price goes down. But if yield goes down, price goes up. So once those rates drop, it's going to bring the value of these treasuries up if you own them, and you can sell them at a premium and jump into the market when you're ready. Bitcoin was at 111,000, up from weekend lows around 107,000. And the US dollar index, which tracks the value of the greenback against a basket of foreign currencies, edged higher to 98.54. West Texas Intermediate crude oil futures slipped 0.8% to 57.10 a barrel. Apple stock paced the Dow, climbing 4.5% to an all-time high. Let's go, Apple. After Counterpoint Research said its new iPhone 7 lineup has outsold the iPhone 16 series by 14% in its first 10 days of availability in the US and China. Shares of fellow Magnificent Seven company Amazon recovered from earlier losses to rise almost 1% after its cloud computing unit AWS suffered a widespread outage overnight. Shares of Tesla, we love Tesla, which reports quarterly earnings Wednesday, was up 1% on Friday. Proxy Advisor Institutional Shareholder Services recommended shareholders vote against CEO Elon Musk's proposed $1 trillion pay package. Hey, Proxy Advisor Institutional Shareholder Services, get a better name. That name sucks. Also, listen, whether you like him or not, ride or die, that's our Einstein of our generation. I'm sure Einstein was a weirdo too, just like Elon is. But Elon is doing a whole bunch of crazy cool things, right? I don't care how many, I do kind of care, but I don't care how many wives he has and how many random kids with alphabet letters and digits in their name. I don't care about any of that. All right. I care about what he's doing progress wise. It is good for humanity. And I think he should get his $1 trillion. Get it. Okay. I think in 5-10 years, it's going to be absolutely minuscule compared to the output he's going to give. Now, with that said, do I want to go to the arcade with Elon? Do I want to go to Rumspringa? Or I don't know why that came to my mind. But do I want to go on spring break with him and a bunch of friends? No, I probably wouldn't. But do I respect the crap out of the guy? I sure do. Okay, Cooper Co.'s ticker COO shares jumped 4.5% on a report by the Wall Street Journal that activist investor Jana Partners had built a stake. Citing people familiar with the matter, the journal said Jana plans to push for strategic alternatives, including a potential deal to combine its contact lens unit with rival Bausch Plus Lomb. I don't know that company. Shares of Bausch Plus Lomb, ticker BLCO, were up more than 5%. Elsewhere, Oracle stock, which sank nearly 7% Friday, fell 5% further. Shares of Boeing were up 1% after it received Federal Aviation Administration approval to increase 737 MAX production. And Cleveland Cliffs CLF stock jumped 20% after the steelmaker said it was looking into producing rare earth metals. Okay. That's a lot of news. I interrupted like 6 times too. I hope you guys don't mind that. The big thing this week is going to be earnings report. That's just how it's going to be. And we've said this time and time again. Okay, go look at our past podcasts. We have hundreds on audio only, Spotify and Apple. We're just brand new to YouTube here. So give us a follow, give us a subscribe. We would appreciate that. We are trying to grow. Help us help you. The revenue of banks is about to explode. Okay, and I think it's going to grow. Companies like SoFi, Goldman Sachs, JP Morgan, Schwab, Bank of America, Wells Fargo, Citibank, Visa's kind of a bank, but not really at all. The companies that are going to benefit from interest rates dropping the most are going to be banks. And there's a really fun, interesting things about banks that most people don't talk about. Right now, they have an immense amount of cash. We're talking $50 to $100 to $500 million in cash, $500 billion, in cash, waiting to make other investments, waiting to offer better loans, more loans to people. Okay, that is a absolute prime roast for people to be investing in these banks. Now, with that said, obviously go do your own research. We are an investment firm. We do manage people's money. So I have to, by the SEC, I have to say this isn't financial advice. You should go do your own research. And even without the quotation marks, you really should. Okay. I do this for a living. I love this. We invest actual millions, tens of millions, hundreds of millions of dollars, but I'm not investing your money. So I do not have your best interest at heart, because I'm not managing it. Okay. I have the data, I have truth, I have my opinion, what I see happening, best interest at heart. Now, with that said, do I want you to be successful? Absolutely. That's why we provide this free information. Do you need someone like me? No, you do not need a financial advisor. You want one. Vanguard did a study that when you hire a financial advisor, on average, they give you 3% more return a year than if you managed it yourself. Now, with that said, a little bit of caveat. I think most advisors suck. I think they're terrible. I think they're robbing you. They're stealing your money. And that's why here at this podcast, at this firm, what we say we own. We have responsibility. We have ownership of the claims that we make. Most advisors aren't going to tell you their opinion on Tesla. They're not going to tell you their opinion on Palantir, Nvidia, on what to invest in the stock market, economic data. They're going to use buzzwords and they're going to blow you around the bush until you give them their money. And then what they want you to do, shut up and leave them alone. It's not how we work here. I don't know why I just gave you a commercial on us, but I hope that you guys will subscribe, follow, and share this with somebody. We want to provide value. Our investment philosophy is nobody cares more about your money than you. We want to earn the right to be second. Okay, back to the actual reason we're here. What's the content of the day? Earnings, right? Tesla's going to have a really big earnings call. That's going to be a big deal. I'm not really so interested in revenue or profit or any of the actual metrics I would typically use to gauge a company. The only one I really care about is going to be their R&D and their CapEx and where is their time investment in manpower and IP going into. And man, I already know the answer because I'm on top of Tesla as much as one can be as a ludicrous fan, but it is all going to be about robots and self-driving. Okay. The robot passion that he is right now with the robotics team. They're staying the night at the company office, at the factory. They are working on stuff night and day. He loves this stuff. Okay. And if you've ever seen iRobot, then you know it ends in a good story because there's that one robot who becomes a good guy and for some reason wants to help the humans. But that whole world of robots going to be a part of our everyday lives, that is going to happen whether you like it or not, and progress will not be stopped. And if I was you, I would do my research and consider investing money in the companies that are going to be at the top, at the forefront of that progression, of that new era, of that new revolution. Palantir, Nvidia, the quantum computing companies, Tesla, Waymo, Amazon, Meta, right? These companies, they're investing in the AI, the quantum space. Everybody has this concern about this bubble that's going on. The bubble that they're referring to isn't actually a bubble because the companies making these investments make a lot of money. They have profits, massive, massive revenue. If Nvidia, Tesla, Meta, Amazon, Apple, Microsoft, if they stop doing AI today and just continue to their normal, regular sleeves of business, they would still be fine. Okay, they would still be fine. It wouldn't absolutely catastrophically destroy their business model. That's what happened in 2001. These companies weren't making any money. There was no profit. Nothing of value was happening within the actual day-to-day operations, but people were investing tons and tons of money into them because of the hope, because they got excited by the internet. The difference is we already have the foundation, we already have the infrastructure, and we already have the revenue from these companies. Okay, guys, that is it for today. As always, invest early, invest often. We'll see you next time.